Welcome back. Our Andrew Bell is at the PDAC Mineral Exploration and Mining Convention in Toronto today, catching up with some of the sector's most influential voices. So we are going to go to him now. Andy.
Hey, thanks very much, Lindsay. Yep, live at PDAC, world's #1 mining fest. We've got Shaun Usmar. He's CEO of Vale Base Metals. It's great to see you again.
Great to see you too.
So just remind us, Salobo in Brazil is your flagship asset. Yes. We'll start off with copper, because I know you're huge in nickel as well. But of your copper production, how much would come from Salobo?
So we did 382,000 tons last year. I think we're one of two companies that exceeded guidance in both metals. But we did about 219,000 just in Salobo last year, and nearly 400,000 ounces of gold.
400,000 ounces.
It's a lot of gold for a copper company.
Quite a bit of that gold, though, gets bought by Randy Smallwood of Wheaton Precious Metals.
We've done him well this last year.
He's been happy with that.
He should be,
Then where else do you get copper from, just to sort that out?
So in Brazil in particular, we've got Sossego, which they've hit their biggest numbers since 2022 last year, a record at Salobo. And then we've got polymetallics in Sudbury, and we did about 90,000 in Canada just with our nickel ore bodies. Only about a third of our revenue in Sudbury now is nickel. What? The rest is copper, cobalt, and PGMs, gold.
But can you flip around in Sudbury? Is that can you boost your nickel and cut your copper?
There are different ore bodies which have different sort of splits. So, for example, you saw we announced late last year the framework with Glencore on Nickel Rim South. That's more copper rich.
Sorry. Is that reviving a mine or a
no,
new
so
thing? Sorry.
It's leveraging existing infrastructure that is now in a depleted part of their footprint. So they've got some of the best shaft infrastructure in the basin. We've got contiguous ore bodies, Sudbury synergies. So the idea is to maybe deepen that by about 700 feet and drift across to our ore bodies. And we save capital that we otherwise would have to invest. They access our ore bodies, and it's a 50-50 joint venture that we're pursuing.
So copper, pretty profitable right now. It's roughly $10,000, $11,000 US a ton in London, and your cost is below 1,500, 1,500.
We were below 1,000. We actually lowered guidance in Q3 last year, and we were below the low end of cost guidance last year.
So you've got pretty good cash flow right now from copper?
Yes, we do.
And then what about nickel? I mean, you're almost better known for nickel because of Sudbury. How much nickel do you produce, roughly?
We've been producing over 100 years, and so this year we're guiding to 175 to 200,000 tons. There's opportunity for more, but we don't want to oversupply the market. And the focus there is we've dramatically lowered cost, and we're really maximizing the throughput through our vertically integrated facilities in Sudbury and in Voisey's Long Harbour, and that's the focus on making sure we're competitive through the cycle.
What do you have in Long Harbour in Newfoundland? Is that a smelter or a refinery?
It's a hydrometallurgical facility there which processes exclusively the Voisey's Bay material with some custom feed.
Big question, obviously, the IPO. Do you have any plans for the possible spin-off from Vale in the near term?
Yeah, I was excited to share with you when we last spoke a few months ago. You could see our results coming out, but we beat guidance. We were nearly $900 million better off on cash flow last year, and about 60% of that was through cost improvements, productivity, volumes. So the idea is to get the business IPO ready for our owners, which we're aiming to do around the middle of this year, and to maximize their degrees of choice. They can continue. I know Gustavo is very much focused on unlocking and being patient on the copper growth in Brazil in particular. And we've dramatically lowered our capital intensity on those projects and also accelerated the pipeline. We'll do about $3.5 billion over the next 5 years just on copper in that area.
Spending or cash flow?
No, spending and investment in 3 projects, and then we're looking to double through 2035. But those returns with the approach that we've taken now have gone from mid-teens to some cases over 60%. So we're really focusing on how do we bring it online, continue to operate responsibly, and make our nickel business robust through the cycle.
What do the investment bankers tell you? I guess they say do it now. They want the fees.
I think it's an unusual window right now, and I do believe our business is performing, but we're not the owners. Our job is to be able to present choice to them. And I think we're 2 years ahead of what I thought my team could achieve. We went from 24 billion, 3 of EBITDA. Last year was 3.3. And if you look at just our guidance this year in this sort of price environment, we're materially further ahead on that. And if you put a multiple on, you can get a sense of the value of this portfolio, which is not reflected yet in Vale's share price. So we'll have an investor day at the end of March in Toronto to be able to actually showcase some of the technical work we're doing and to help the market understand just how valuable this portfolio is.
Sorry, so you're at about 3.3 billion in EBITDA right now?
That was last year.
Okay.
Oh yeah, no, our run rate is well ahead of that.
What kind of a multiple would an IPO be at?
So if you just think about comps, think about peers normally trade around, let's say diversifieds, maybe in that 5 to 6 times EV/EBITDA multiple. Pure players are more like 6 to 10, some higher. So we can dream. Yeah, but you can do that math.
Yes. Yeah. What about cobalt? What about these so-called strategic metals? You're so big, and they're very small markets in some cases.
Yeah, cobalt's interesting, right? It's always been historically very dominated by the overhang of supply coming out of the DRC. It is a polymetallic, lucrative revenue stream for us coming out of Sudbury and in Voisey's.
Oh, you get some cobalt.
Yeah, we get significant cobalt that comes out of there. And we've seen the government, the DRC, like we've seen with Indonesians, constrained supply, and that's had a significant impact on supply and demand and pricing. But we produce really significant volumes of cobalt, but it's a byproduct for us.
Right. How much of the global market would you have in cobalt?
It's not material in the grand scheme. But I think we're one of a few accredited suppliers into the defense and aerospace side, for example, in the US.
Yeah. And have you been dealing with governments around the world trying to stockpile this stuff? Have you found yourself talking to defense types?
Look, we provide, I think I might have mentioned to you last, I think our Sudbury operations provided 95% of all the nickel in World War II to all the allies. We do about 60% of the nickel to aerospace and defense. So our priority is continuing to service our customers around the globe, because we go from Japan, Indonesia, Wales, all over Canada and Brazil. And so we have a platform that allows us to serve customers all over the globe, but governments are very much in the conversation, as you'd imagine, in this moment with supply chains.
It's interesting, for decades after, we'll just get copper or China to supply us with metals, for example, the attitude has changed.
Yeah, I think, we've had a global supply chain that has worked in a very efficient, cost-effective way for a long time. But we've seen the vulnerabilities starting to appear, and I think people are reconnecting with just where these supply chains come from, and we have a role to play there, which is important.
And Indonesia is trying to get that nickel price up by restricting supply?
Yeah, quite dramatically. It's only the last handful of months, but the back end of last year we started seeing that move. They've been, I think, quite direct with their messaging and some of their actions with their cutbacks on RKABs, I think down to 250 from numbers that were materially higher last year. So you've seen the market respond, and for us though, our business in Canada has so much potential, but it's been going for over 100 years, but we've got to make sure that regardless of policy changes elsewhere, we have to make sure we're in that lower half of the cost curve so that through the cycle we're resilient, and that's the focus. We're not there yet, but we've made last year alone, overhead was about $250 million lower in our nickel business. We were at 27% on our all-in costs lower in nickel and 77% on copper last year, so huge numbers, but we've got further to go on nickel.
Shaun, thanks very much.
Thank you.
Shaun Usmar is the CEO of Vale Base Metals.